Hello there. Welcome back to Cost and Management Accounting Exercise. Today, I want to look at the question paper of October 2020. This is the question paper that we have for today, October 2020. And then we are going to look at question 3 of that question paper, whereby we are going to calculate the net wage on that question. So we can go to our question. This is our question, which is question 3. And the question reads, the following is an extract from the weekly pay of an employee, Ms. S. Gumede, for the week ended 24 January 2020. And we have given a table where we have normal hours per week, hours worked, units produced, normal wage per hour, overtime rate, and then we have a production bonus for every 100 units produced. So this is what we have, and also we've got information for pension funds. We go down with the question. I would say that we also have a medical aid employee contribution, and we also have our income tax that is paid. And then lastly, Mr. Gumede and his employer contribute toward the UIF according to legislation. So what does the legislation say? Obviously, the legislation is 1%. We are going to employ 1% there. Then on the required part, show all calculations. And then on the first part, that is 3.1, calculate Mr. S. Gumede's net wage for the week ended 24 January 2020. So we have to calculate the net wage. And also you have to take note that this is for on weekly basis. So this is what we have. So we are going to go to our 3.1. And if you go to our answer section, you see that this is what we have in terms of the calculation of net wage. So we are going to start with our normal pay. So this is our normal pay that we are going to start with. That is our the payment that is we are going to make in terms of the normal working hours. So on our normal pay, we go there to see what we have in terms of the information that we are given. There, go to the at the beginning of the question, you'd see that we are given normal hours per week. So we have got 40 hours is our normal hours per week, and I will look at the normal rate that is being paid. You come here with normal wage per hour 150, as simple as that. So to get the normal pay, we are going to multiply the number of hours that we have for normal working hours, which is 40 hours. Then we multiply by the rate for normal wage, which is 150. So 40 times 150 is going to be the first part of normal pay. So we come here. We are saying in brackets, we can just show the working that we are saying 40 hours. 40 hours, and then we multiply by the normal rate, which is 150 rands. So this is what we have. We multiply the two, you get 6,000 rands. So here we have what 6,000 rands. So and then from there we also have to try to check in terms of overtime. So overtime pay as the next one. So we are going to go there and check our overtime. So we are told that our normal hours are 40 hours, which means if hours worked are above 40 hours, the extra becomes our overtime. So remember, actual hours worked is 46 when normal is 40. So to get the overtime now, we are saying 46 minus 40, and you get 6 hours. So 6 hours becomes our overtime hours. And then I will check the rate of overtime. We come here, we're given that overtime rate is 1.5 times normal rate. So our normal rate, we know that is 150. So if you multiply by 1.5, then you get your overtime rate. So basically we are saying for our overtime rate, we are saying 150 times 1.5, which is 1.5 as a decimal, times 1.5. Then you get your the hours for, the rate for pay overtime. So we are just going to say 6 times 150 times 1.5 is a summary of our working there for our overtime pay. So we are saying we have our our overtime workers, overtime hours is 6 hours. So we are saying 6 hours. We multiply by the rate that we are having for normal, which is 150 times 1.5. That is 1.5 there. and then we calculate that correctly, the answer that you're supposed to get is 1,350. So here we are saying 1,350. So this is what we have in terms of overtime pay. Then if you have got any other bonuses that we have there, we also have to include them so that we get the gross wage. So that we get the gross wage. We are also told that over production bonus for every 100 units produced is 100 rands. So 100 units produced. So we need to know how many units were produced so that we know how many 100 units are in those units. If you come here, units produced, we have got 2,500. So we want to find out how many hundreds are there in 2,500. If you say 2,500 divided by 100, by 100 units, this one, we see how many 100 units are inside 25,000. We divide there, obviously, we are going to get 25 there. So we've got 25 uh, 100 units inside 2,500 units. So to get now the value of production bonus, we're now saying this 25 times 100. Then you get our production bonus. So here we are saying production bonus. Then we saw the calculation. So remember, we are saying 25 times 100 rands. And obviously, there you are also going to get 25,000 rands. So this is what we have. So I will get 2,500. Multiply the two. You're supposed to get 2,500 there. Let's just 2,500. Right. So this is what we have. Then now to get our gross wage, we are now adding normal pay plus overtime plus production bonus. Then you get your gross wage. So here we are saying gross wage. You just add 6,000 plus 1,350 plus 2,500. The answer that you're going to get there is 9,850, and obviously this is our gross wage. Then obviously we are calculating net wage, remember. So we need to subtract deductions. We need to subtract the deductions that we have that we are given in the question. Then we are now saying less deductions. Right. By saying less deductions now, we now list the deductions that we have in the question. We go deduction by deduction. Deductions are here. We start with pension fund. We are told that the employee contributes 27.5% of his gross remuneration. So we are only concerned with the part of the employee. For the employer, we are not concerned about that because we want to calculate the net wage, and the net wage is concerning the employee. So the employee contributes 27.5% of his gross remuneration. So at the gross, remember, we have got the figure for gross as 9,850. Then we multiply by 27.5%. And we know that 27.5% as a decimal is 0.275. So we're going to say 0.275 times 9,850. So we're going to just go there and summarize that one. We are saying pension fund. And we are saying 0.275 there. 0.275. 0.275. Then we multiply by the gross wage, which is 9,850. Then you get your pension fund. Then your pension fund becomes 2,708. Remember, this is money, so we have to round it up to two decimal places. So get 75 there, and then this is our rands. So this is what we have in terms of pension fund. Then we go back to check the next one. We are also having medical aid, and it's saying medical aid employee contribution. We have the employee contributes 500 rand towards this medical fund, and this employer contributes 2 rand for every 1 rand contributed by the employee. So we we are concerned about the employee. Employee is 500 rand. So this is our medical aid. Medical aid contribution is 500 rands. So we are here. We're saying medical contribution. And we are saying is 500 rands. So I will check the next one. We are now on income tax payee, which is pay as you earn. It's 18% of gross wage after pension has been deducted. After pension is deducted. So what are you saying? We have to say gross wage. Then we subtract the figure for pension. The answer that we get, we multiply by 18%. So I will come here. We are saying we are now on income tax. So we can just summarize the working day. We are saying, first of all, we have to subtract the pension fund from the gross wage. Gross wage, remember, is 9,850. So we are saying 9,850. We subtract the pension fund, which is 2,708.75. Then the answer that you get here, you now multiply by 18%, which is 0.18 as a decimal. So here 0.18 there. And then we close. So we calculate the first subtract here 9,850 minus 2,708.75. The answer that you get multiplied by 0.8. And the answer that you're supposed to get here for income tax, you're supposed to get 1,285. 1,285.43 to 2 decimal places, rounding up to 2 decimal places. So this is what we have. Then obviously we have got another one that is there, the deduction. We go back then again. We have got let's try to see UIF. Mr. Gumede is employee contribute towards the UIF according to legislation. We know that legislation says 1%, and 1% is a decimal is 0.01. So we're going to multiply by 0.01 times the gross wage, which is 9,850. So we go back there. You're now saying UIF. So in brackets, you're saying 0.01 is 1% as a decimal multiplied by gross wage, 9,850. Let's try to multiply that one. The answer that you get is 98 rand 50. So this is our UIF. So remember all these figures, we need to subtract them from the figure for gross wage so that we get the figure for net wage here. It means here now we have got the net wage after subtracting all those figures. So we can show by brackets that we are subtracting. We're subtracting these figures from the figure for gross wage. So we subtract there. So what are you going to say there? We're going to start from the 9,850 minus we have got 2,708.75. Then we subtract again 500. We subtract 1,285.43. We subtract 98.50. So there we try to see what do we get there. Let's try to calculate there. The answer that you're supposed to get there is 5,257.32 cents. So we have got 5,257.32 is our net wage. So this is our net wage there. This is our net wage. Then now, having found our net wage, I will now go to the next question and see what do we have on the next question. Next question is saying calculate the employer's contribution towards the employer's medical aid. Now we are on the employer part, the employer, not the employee. So we go to the section of the employer and see what is it saying about calculation of employee of medical aid. Medical aid, we are here. They are saying the employee contributes 500 rands towards this medical fund, and his employer Remember, we are now on the employer. So here, employer contributes 2 rands for every rand contributed to the employee. So what does it mean? It means the amount that we have for the employee, we multiply by 2. That's what it means. So it's saying 500 times 2. So I've made go 8. So we are saying this is now 3.2. 3.2. So basically what we are saying the 500 rands that you are given, we multiply by 2. Then we get our 1,000. So this is the employer contribution. Then we are going to 3.3 and see what is it saying. 3.3 reads calculate the employer's contribution toward employees UIF. UIF is here, and we are given 1%. And the instruction is that is according to legislation. Is according to legislation. And legislation says they contribute the same amount that is the employer and the employee. So for the employer again, we are going to have 1% there for the employer. So we are going to say 0.01 again. We multiply by 9,850. So here we are saying 0.01 times the gross wage, which is 9,850. And obviously we are going to get the same amount, which is 98 rand 50. 98 rand 50 cents. So this is what we have. Then we go to the next one. We are now on 3.4. Let's try to see what does 3.4 say. 3.4 is calculate the employer's contribution towards the employee's pension. We go to pension fund and see what is it saying. On pension fund, the employer contributes 50% of the employee's contribution. So the figure that we got there for the employee, we divide by 2. 50% is it's half 1/2. So we can just go there and look at the figure for pension for the employee that we got there. Pension we got 2,708, 2,708.75. So here we are saying 2,708.75. There we multiply by 50%. 50% is 50 over 100. Basically, if you reduce this one, it becomes 1/2. Then you say 2 into 2,708.75, and then the answer that we are supposed to get there on 3.4. Let's try to calculate that one. Let's try to calculate that one. We are going to get 1,354. 1,354 there. 1,354. And then 0.37. So this is our final answer for 3.4. So guys, this is what we have on question 3 of the question paper of June 2020 concerning the calculation of the net wage. Let's keep notified. Of those who haven't subscribed, please subscribe and share. We are still coming with more videos. As for this video, I'm signing out. We'll meet again in the next video.